Ladies and gentlemen, welcome back to Apex Investor. This is your daily update for Thursday, January the 26th. Wednesday, January the 26th. So this is the update for yesterday. Metamaterials trading between 157 to 175. And the market just opened a while ago. But if we look at the last week, just to review the week that it's had, 155 was the low, and it went down to that same level just yesterday. I should say 157, so it was close to that level of support, and I do believe that is support moving forward. If it goes below that, you're just getting yourself a really good discount, and it is a great discount, frankly, under $2. So that's metamaterials for you, and the volume. Well, it just started, so I can't really judge that because the market just opened. But we have some bright days ahead in the next 2-3 months until the Oilco spinoff is complete, and they finish up the dividend there and wrap it up and give it out to the shareholders of the dividend. And then you have Coinbase, which is actually, I'm going to keep this up here because this is actually a really good buy. Since initially when I bought it at I think I bought it at 220 initially, so this is a really good price because you are under 200 even. So when I bought it was at 220, and I think I sold it around 300, or just anyway above 220. So the way crypto works is it tends to just go up, and when it goes down, it's cyclical. It doesn't stay down for too long, and if it does, you just sit and wait. And then wait for it to go to the moon, and that's what it tends to do. Coinbase is a really good stock. I don't know if they're going to go Mount Gox and go belly up, but looks like they're here to stay so far. But things can always go sour, so it's better to just invest in Bitcoin proper instead of a company that acts as a middleman for Bitcoin. This is really good. We're below support of 200. We're at 182. Yesterday was 177. The 52-week range 162. 162 was a really good price, and you could pretty much double your investment, your portfolio, or whatever the value put into this, going from 162 to pretty much 300. It's pretty much a guarantee at this point. It was at 342 in April of last year, and then was up at 353. So it went up there twice. So we have a history of it hitting that level of resistance, or that ceiling of 350, 360. But that ceiling is completely dependent on the value of Bitcoin. So if Bitcoin's at 100,000, this stock will be probably close to $500 per share. Okay, we're going to finish up the stock portion of this video, looking at AMC, trading at $15 yesterday to 18. So 15 to 18 was the range, and so far it's 15. Wow. Okay, so it actually did hit 15. I predicted that would happen, that it would go below 20. As I was saying, true support is pretty much $6 to 10 as your Apex Investor entry point, and then the next level would be 10 to around 16, maybe even 12, to be honest. If you look at that little gap there, 10 to 12 is pretty a good entry point. So I wouldn't buy this until it hits 12. 6 to 12, but 6 to 10 is really safe. 10 to 12, that's pretty good too. And this will go right back up to at least 40. At least 40. It's going to take a while, but it will get back up there. AMC is a pretty good stock so far. But depending on what happens with the movie theater business, and it's not looking so great because a lot of people are streaming, and people have become comfortable, such as myself. I'm more comfortable just watching things at home, and I don't really miss the movie theaters that much, especially if you have a big entertainment system or you have a VR set and pretty much simulates the grandeur, the scale of a movie theater screen. However, it's hard to replicate that audience feel where you get all that reaction and big laughs or big jump scares or whatever, the cheering for like in big moments like Avengers Endgame, where you had that moment there with the Avengers Assemble moment. So GME is the next one. It was between 100 to 119 the other day. So this is dropping down to 60 to 90. I think your Apex investor entry point, you're looking at 40 to 60. And then 60 to 90 is your next tier of entry. So wait for this to go to 90 before you put $1 into this. And then you could sell this off pretty much guaranteed at 260, because it's hit that level at least 3 times. 240, 250. Yeah, even 240. So you buy at 90, 100, sell it at 240. That's it. You pretty much double your investment, more than double it. So that's GameStop for you. And then the last stock we're looking at is DWAC. Trading between 66 to 73. So that's a pretty good price for you at 66. Knowing this will go back to triple digits, it's almost a certainty once the end of February comes. And then we'll see what happens with this moving forward. But I think all the hype is just going to foment. It's going to spill over, and you're going to see the stock really take off at the end. Actually, you probably the whole month of February you might see this just stay up, and then it might go down a little bit, most likely in March. But we'll keep track of it and see what goes on with this, because it's going to be an interesting ride, to say the least. Okay, we're going to look at a bit of news here. This was something that George had tweeted, an article from sciencefocus.com. I forgot to cover this, but it's very important because they list 9 designs that could revolutionize the auto industry. So most of this list, pretty much 8 of 9 of them, are all cars. So the Tesla Cybertruck, you've got the BMW like futuristic SUV. It says it can change color. Really? Wow, that's kind of interesting. The number 3 is the Meta Materials HUD, heads-up display. So the heads-up displays are one of the classic science fiction tropes that you see over and over again in movies. At CES 2022, Meta Materials displayed this kind of technology using holographics to show key information directly in the driver's eyesight. I'm surprised I didn't see anyone post a video of this, but that's what they say anyway. Meta can claim this would help the driver focus on the road without looking down at the display console. A HUD would mean the driver's eyes wouldn't have to adjust to different brightnesses when switching from the road to the instruments in the car, and would in theory improve a driver's reaction time by always looking at the road. However, like a lot of car tech, this is still a long way away from now and would likely need a lot of approval before it could be implemented effectively into cars. And they say implanted. Maybe, I guess that can work too. So that is a picture of what it could possibly look like. It looks like something from Iron Man and a lot of video games that I've played. So that's number 3. And you've got, again, all of these are cars. So Hyundai Elevate or Hyundai. So it's a vehicle with legs, essentially. That's interesting. Canoe pickup. Okay. It looks normal, not to me. It looks like something from space. Okay, the next is the DS XE10s. That looks really nice. What is the DS? DS automobiles. Yeah, that looks nice. Feels futuristic. Okay, Audi AI Trail. That looks like something from a movie as well. And then the Cadillac Interspace. Wow, that looks really sleek. Looks very, what's that era? Art Deco, 1930s. Sony Vision. Okay, this is not a car. This is Sony saying you need a lot of screens for rear seats. They're going to turn it into a big TV. So you're going to be distracted like crazy. I don't see how you don't get a ticket having this because you will not be focusing on the road. You're going to be looking at all these YouTube advertisements or whatever you're watching on that. Okay, so we're going to pause the video and look at if there's any more news. Okay, welcome back. We're at George's Twitter, and he said, find the difference between these two images. So one person with a keen eye said that you put nanoweb on the window. Is that true? I'm trying to see. There's a reflection right there. Okay, it's white light coming out, but then when you look at this one, yeah, there's a lot more light. Perhaps he's right? I don't know. I'm not sure. Can you please tell us what it is? Maybe it's the fake Meta, Reality Labs and Meta. Maybe that's what he meant. I don't know. I'm not sure what he's saying, but could be Google. Google and Meta are next to each other. The banner is backward from the booth behind Meta and Google. I only figured it out once. Okay. Yeah. Okay, well, it's interesting. It's a funny post from George. But there is a lot of... George posted a lot of content in the last... since the 24th. So let's look at what he posted. Most of it is relating to the AR technology and fitting their nanoweb with different prescription lenses. So we have an AR VR session at Photonics West, hosted by Bernard Kress. And then you've got CTO Dr. Jonathan Waldron on stage, showcasing their capabilities and products for nanoweb and AR fusion. Okay, I'm going to just click that image there, get a bigger zoom in there. So it's interesting that they're showing potential ways to use their technology. It says embedded technology example electronics. A key functionality of smart eyewear combines virtual content with outside content detected using microelectronic devices such as light sensors, micro cameras, LEDs, microphones, etc. The devices are powered by conventional or solar batteries connected via conductive printed circuits. Wow, okay, this is way beyond my pay grade. Recently, a lens embedding IR LEDs, infrared LEDs, and micro cameras was developed for leading eye-tracking OEM glasses. Meta's nanoweb technology, see later slides, is ideally suited to embedding electronics on curved surfaces. Okay, that is something that I didn't really consider, that electronics are actually embedded into a curved surface. Okay, the edged lens is shaped a lot like a generic scuba mask lens. Interchangeable, can be swapped with prescription lenses. Interesting. He's going to try to get a recording released after the show. Okay, that's a funny post. Where's my dividend? Guys, you gotta wait. Wait till March, April. You gotta wait. Alright, so that is really good. Wow. I think a lot of this tech is going way over people's heads, even my own head, as to how great the potential is for this company. So you've got a laser eye protection with high density multispectral optical filters and eyewear and film form factors, a live demo. So showing a, looks like a pilot mannequin, and they're demoing how possible laser attack will not affect their ability to fly the planes, and so that is very practical. And then the next one is holographic AR displays on prescription-ready eyewear. And here's a demo here. Let's see if this will play as well. So you have medical staff in looks like an operating room. So I'm not sure how they're going to incorporate that into surgery or in the medical field, but let's just take a look at this video. Okay, see that the lens is part of it, right? Got 5 seconds to Okay, I think I have to read the subtitles to really understand what they're presenting there. I mean, increase the size of the video. Okay, it says here Meta has developed AR prescription lenses on Covestro photopolymers. That's a pretty big deal. Holographic film or liquid materials deliver very low haze display solutions. Excellent business impact from cost savings to productivity. Okay, I think that's it. So that doesn't seem to be related to the medical profession. It just seems to be a general advantage to have a augmented reality in your lenses. So again, you could customize these lenses to your needs. It doesn't have to just be laser. It doesn't have to only be AR. It could be both. It could be one or the other. And then you've got another one here. Electrochromic dimmable eyewear with millisecond speed transitions using nanoweb and prescription eyewear and film form factors. So there's a live demo. So that already exists, the dimmable eyewear, but I wonder what makes this, what sets this apart as special compared to what we already have. So let's take a look at this video, 41 seconds. So it is dimming really quickly. That dimmed really fast. Okay, so this works. So my question is this something that you can control? Because if it is, that's amazing. But if it is something like transition lenses where it just does it automatically, that might be, it'll just make people say, so what? We already have that. But if you can control this, the dimmable aspect of it, and you could control it, I want it dark now, as opposed to only dark when it's sunny, or you can just control it based on your own needs or your own preference, then that is pretty groundbreaking. And hopefully, I don't know, one of these days I can stop by their booth and get a shout out, take a selfie with George. That'd be nice. And then you can see they're catching up with Metamaterial Strategic Advisor Mark Brongersma. Okay, so that's all for the George's Twitter aspect. We're going to look and see if there's any news on the Reddit front. Okay, welcome back. This is the first post from Metamaterial subreddit, and it's a short one. Q1 earnings report. What will you be looking for specifically? I'm going to answer that before reading the comments. So what I'm looking for is reporting the revenues, a gain. I'm looking for a significant gain in revenue. I'm looking for the deals they've made, specifically with Seki Sui, with Covestro and other things, and possibly new deals that have not been announced, or maybe people forgot about or just did not know about, but they've been ongoing for quite a while. They might mention as well the GlucoWise study that was completed. I don't know if that was mentioned yet in one of their quarterly earnings, but that could be reported as well. But we're looking for hard data and just numbers. We're looking for good numbers in terms of revenue and increases compared to the previous quarter and the previous year. So let's see what they write here. Good question. Nanotech, okay. Revenue should be up, yep. Yeah, we'll see how that affects the revenue, but I think it will be a lot better. NDAs are making us money. Yeah, again, they cannot announce actual partnerships. They can only announce whatever's been announced by their partners themselves. They can't announce something and out them because, again, the NDA or the gag orders prohibit them from doing so because of the competitors. You're going to make your partners susceptible to being countered by the competitors. I'm hoping nanotech doubles revenue again, and the total revenue shows 50 million for Q4. Yeah, that's a really good post. The Lockheed Martin partnership. Yeah, I expect to see millions in revenue. So that's that pretty much sums it up. And the next post is along the same lines. What do we need to see from metamaterials for I think he's referring to the stock price to go up? Yeah, okay. Let's have a discussion. What do we need? Good quarterly earnings. That's what the first post mentioned. We need to see maybe commercials. I don't know. Effective ads, advertising. That would be something. And just word of mouth spreading about this company. And that can only happen when they become mass market. But a lot of talk is spreading on this regarding metamaterials. It is one of the most popular stocks on StockTwits and all over the internet. It is a very popular and well-known stock. Let's not forget that fact. Okay. Next post. I'm going to vet this. Let me just vet this. Okay, I thought I paused. That's why you're seeing my screen there, because I'm pausing, but it's not actually pausing. My hotkeys are not working. Applications of laser strike protection. It is not what you think. Posted earlier, but buried in a comment of an earlier post. I read an article the other day how satellites have non-kinetic attacks on them, like every day. What I mean is they use scramblers and lasers the same as you would to throw off a heat-seeking homing missile. The value Meta can provide protecting government satellites and missiles is far more lucrative than just sunglasses. This is definitely NDA territory, though. You will never hear about it, just see the numbers. So we can laugh about a pilot not getting a glint from a laser and just wearing red goggles, but I see the real application being protecting guidance systems from the various strikes. That's actually potentially could be true. Most, if not all, of the methods used to defeat these systems are beatable with metamaterials, being easily integrated into existing systems to protect our weapons from countermeasures and protect our aircraft satellites from attack. I think when he says our, he means Americans. We know lots of this stuff is initially developed for aerospace. This seems like a far better and common sense use for this tech. If all it takes is a laser pointer on a Tesla sensor to blind it, that seems to be a problem waiting to happen, and we have the solution in hand. So why would you give it to these two countries? It doesn't make sense to me why you would do that. And I don't think that has a price on it. It's like the Manhattan Project. You're not selling to the highest bidder. It is for the allies only. It's not for the axis of evil or the enemies of America. Great info. I think we are friends with all the right people too. Yeah, I agree. The Department of Defense, Department of Energy, and so on. Essentially, the U.S. federal government are their friends. From our new hires to our connections with other companies, especially folks like Lockheed Martin and Elon Musk, this is going to be a very fun ride. Excuse me. And I can't wait to be able to see inside my microwave. Yeah. Yeah, there's so much going on with this company. Not even touching on the AR, VR aspect or angle of metamaterials, and that could be its own massive thing on its own. I want to watch this video. I might just do it offline though. This is Trey's Trades video there. And It says, good video from Trey's Trades, not only about AMC, but all mid and small caps being manipulated. It applies to Meta. Ever since the merger, we have been manipulated down. Compare the chart of Meta since June to some of the other companies he speaks of, nearly the same chart. And they're right, because there are other posts comparing Meta to GameStop and AMC, and it follows a very similar trajectory. Maybe not exactly to a T, but very similar overall in terms of up and down. Trey says it's an oracle of universal knowledge. Shut up, Meg. Yeah, the market is rigged. I agree with that. But there are entry points that are better than others, which are your apex investor entry points, which we find by looking at market crashes and 52-week lows, things like that. And then there are appropriate exit strategies as well, looking at resistance points. Okay. It says China is going to need our tech. Really? Why? Oh, they're going to steal it. Yeah, I agree. They're going to steal it. They're not going to... They're just going to steal it. They're going to reproduce it. Although, with metamaterials, I don't know how much they can ape. No pun intended. Okay, we acquired Rollith and Nanotech. Okay, let me just open this up and see why are they saying China will need it. Protesters point lasers at police. Oh, that's why. Okay. To prevent facial recognition. Oh. Okay, so you want to ensure these people get identified. I wouldn't want that. I don't want them to be identified, protect their anonymity. Wall Street Bets, this is Wall Street Bets in a nutshell. They're going gaga over this photo that may or may not be real. I think they said it's Kathy Wood, apparently. It isn't, but... So let's watch this video of Trey's Trades. All right, muted it. If you don't believe in market corruption, this will convince you. Here we go.
Girls, welcome back to freaking Trey's Trades. I've been up the entire night. I've got freaking bad insomnia, and I wanted to dive into a sneaking suspicion of mine.
Actually, I just realized who he reminds me of. Have you ever watched Breaking Bad? He reminds me of Pinkman. He reminds me of Jesse Pinkman. That's who he reminds me of. Okay, here we go. Just turn it over there. I want to go deaf. Let's hear.
And it's pretty obvious. You look across the broad market, you look across a whole bunch of different stocks and see that there's massive short selling taking place. But I wanted to dive a little bit further and into what I believe was, and I'm confirming to be, in my opinion, some pretty targeted attacks across a variety of different stocks, such as the one that you see right here, AMC. This is not the only stock that has been targeted and maliciously attacked by short sellers. Now, I want to dive into what I think this is. We're going to go over a couple different things here today. So I'm going to show you guys some small cap and mid cap companies. If you don't know what those are, don't worry, I'll walk you through it. I know we have a whole bunch of different education levels here. I then want to show you some data points that collectively compare these to a large cap company and why I think that there's eventually going to be a bit of pressure and a bit of pressing down on these short positions in the coming months, spurred by what I actually believe to be a possible short-term recession, if that does come to fruition, to cover out of these stocks. So, with that being said, let's dive into the video. Before we do, I want to give credit where credit's due. I had the idea to dive into this because of me, Kevin. He did talk about this, so I decided to fact check him, and I came to some pretty similar conclusions. So, with that being said, just so we're all on the same page, I'll start off here with this, right? These are what I'm using as reference points in terms of small cap and mid cap companies as we continue to talk about these further along in the video. A $300 million company to $2 billion company is currently what I would call a small cap. You can consider a mid cap to be $2 billion up to $10 billion. The market capitalization is if you take all the shares that are floating around on any given stock and you multiply that by the current stock price, that will give you the market capitalization, or about how much money is currently invested into that current ticker or company, right? With that being said, I've come to find two pretty interesting trends. The highest short interest that you see across all of these different stocks thrives in small caps, and the mid caps come secondarily with a medium short interest level. Now, why is this important, right? Because my hypothesis and my theory is that small cap and mid cap companies are being targeted by short sellers and have been for pretty much all of 2021, what appears to have been one of the greatest bull traps perhaps set of all time. Now, why do I say that, right? Well, I had a thought the other day, and it seems pretty realistic to assume that there was some perhaps nefarious intent on getting retail investors into the stock market. Let's go back in time, right? When you were freaking trying to argue over whether or not you deserved a $600 stimulus check, banks, institutions, and politicians were being pumped trillions of dollars by the Federal Reserve, right? Well, you still ended up getting money. And what's the most probable outcome of you putting money into the stock market? Well, when a bunch of people decide to slap into the stock market, stocks go up, stocks do great, right? People make great money. And then, who are you pulling from? Institutions, banks, politicians, insider traders, the Fed, right? They don't want you to keep that money. They really don't. Why do you think you've got dinglings like Jim Cramer out there who pump you stocks that sell off a week later? Why do you think that price targets come out so that institutions can dump bags on you? Why do you think they talk about squeeze plays and the way that they do? Well, it's for a reason. It's because they have whatever they're pitching you. The other side of the coin is trying to probably do the opposite. For instance, Netflix, people want to get out of that. They talk about freaking Peloton, they wanted people to get out of that, et cetera, et cetera, et cetera. But the point being that I believe that this was a purposeful attack by institutions and by banks to try and fucking steal from people. And I've got some data points to sort of prove this, right? So all of this is coming from Ortex. I am not affiliated with them. They do not pay me. This is just what I use to get my estimated short interest on given stocks. This is based off of 85% of exchange reported data. This data deriving from FINRA, which is who essentially regulates and governs the self-reported data of whatever short is existing in the market. Keep in mind that shorts are not required by law or by regulation to report a short position if they do not want to do so. I have these sorted by market capitalization. So you can see here a list of 15 different tickers. I have two ETFs in here, IWM, which is the mid-cap index, SPY being the large cap index. I have two large cap companies, both of these being worth more than $10 billion. And then I have some small and mid cap companies. Remember the definitions we had earlier? Small cap $300 million to $2 billion, then mid cap $2 billion to $10 billion. Well, with that being said, I plotted this all out because I wanted to see, let's just think about all the different names that have come and gone over the last year. And I remember very distinctly that people would scream and yell. They'd say, this ticker is a distraction. This is absolute horse shit. You're taking away from the movement. You're taking away from other people's pockets, and this and that, and this and that, right? When at the end of the day, you were actually right, and you were actually also wrong. All of these plays have been, in a way, a distraction. And I don't mean that in the sense of retail has been wrong. What I actually mean by that is that institutions have been purposefully driving down every talked about ticker for the last 12 months. Check this out. BBIG, Ader, Microvision, Sundial, Sensonics, Wish, FuelCell, ChargePoint, GameStop, AMC, Plug. All of these tickers have short interest over 11%. And you can see here that if you plot it out, this is the lowest market capitalization of $87 million. That's BBIG, 27% short interest. As you go up in market capitalization. The short interest by trend tends to go down. You can kind of see this overall trend right here, right? Obviously, there's caveats. There's certain movements away, whatever you want to call it, from this trend line. But the fact remains that as market cap goes up, short interest goes down. You can see this as I've dropped Microsoft and Apple, both of which are $2+ trillion market cap companies with short interest of 0.65% and 0.58%. Now, Trey, I get it, right? The better the company, the bigger the market cap, the less shorts are probably going to target it, right? But let's come back to this. Let's look at a few of these different names, right? Check this out. Fuel Cell had an infamous retail bull run all the way up to $30 to now be at $3.90. A 95% correction. Well, how about BBIG? $12.49 down to $3. Ader, $50 down to $2.82, and the CEO literally came out and said that his stock is being naked short sold. Come on! I mean, it's so obvious. It's obvious what this is. Retail has been pumped a fucking bag for a whole year. And you can see it in the numbers. I don't want to hear squat diddly shit over what's happening in terms of market cap, right? Bigger market cap is just less shorts that pile into these things, right? But this is absurd. You look at IWM versus the SPY, you see that large cap companies are short at 14%, which is already a large number, but then you compare that to IWM, which is a mid-cap ETF of 2,000 different mid-cap companies from $2 billion to $10 billion being shorted 41%. That is a targeted attack. And that's worth talking about. I don't think people talk enough about how broad this manipulation, this corruption, this fucking gaslighting, this "you are the problem" nonsense gets pitched down our throats. It's crazy. It's fucking nuts. I mean, we literally are just called stupid. Every single day, I open my Twitter to some asshat that's saying, how do you feel about retail losing hundreds of thousands of dollars? Pointing the finger at me, right? And I think to myself, I was definitely the guy that shorted AMC 20%, right? I was the guy that shorted BBIG 27%. Maybe the guy that talked about Hater shorted 30%. Maybe the guy that talked about Microvision shorted 20%. Maybe the guy that talked about Sense shorted 28%. Maybe the guy that talked about Plug shorted 11%. I don't know about you, but I think what you're watching happen in real time is retail being convinced that they are the problem, when in fact, you are not. You are part of the solution, and people don't like to hear that. They don't. So why even bring this up, right? What's the importance of this? Well, I've talked about this before. I'll show you this chart very briefly again, in case you'd like to see it. But this is the current outlook of the SPY. It had a little bit of a gap up this morning. You can see the 786 retracement right here. You look at the SPY in the early morning right now, and it had a gap up followed by pretty much immediate fade. Gapped up to right around $440, faded down, gap filled, and now it's just kind of wish-washing around, trying to figure out what it's going to do. But with that being said, I do think there's a pretty solid chance of a 2-month correction. And what does that mean for these mid-cap and small-cap companies, right? Well, unfortunately, it means that you likely are going to see a little more downside. I don't know, it's going to differ from name to name to name to name, right? I know that AMC is a heavy target. Obviously, you can see how fucking computeristic and algorithmic and absolutely like a ladder this stock has looked for the last couple months. But look across all these names. Look across them all. Look at Fuel Cell. Look at Plug. Look at Ader. Look at BBIG. I don't even like Sundial, but look at Sundial. I mean, all you have to do is look at these and see how similarly they trade. You know what they all share in common? They're small or mid-cap companies. And the smaller the cap, the higher the short interest. And the point being that these stocks are targeted because they're retail favorites, because retail investors realize that you can make more money than your annual 5% a year on the SPY. You can make more money than your annual 8% a year on Amazon or Tesla or Apple or whatever the fuck you want to buy, right? They realize that there are good companies out there that are manipulated, corrupted and dropped down to fucking shadow realm because some institution, some bank, some market maker, some dickhead decided that that company's shit and it's garbage. And you guys are stuck holding a bag from way back here because of what these guys are doing, right? It's very incredibly frustrating. And the point of solution, of resolution to me is this. When and if this recession happens and it ends, and this is a point in which Kevin made, and I think he was actually pretty spot on when he said this. He said, I think that where you see a lot of these shorts exit these positions is when this short-term recession ends. And maybe that derives around inflation, maybe that derives around Jerome Powell, maybe that derives around some data points. I don't know what it'll end up being. But what I do think, and what I will tell you, is that when that time comes, when you see a turnaround in the bullish market, these shorts always get out of a position because there is a known saying that said every short seller is a confirmed buyer. These guys will buy. And I think what you're going to see happen across all stocks, I stand by what he said with this, I think it's pretty legit, is you're going to see a whole bunch of different names popping off in 2022. Like, honestly, I can't believe that I haven't connected these dots sooner. I don't know if anybody else has. Maybe I'm just slow. I don't know. But this is something worth talking about, at the very least, for an eye-opener, right? And secondarily, for maybe something to look forward to. Because the last couple months, the last 6 months across a whole bunch of different retail favorite names, I've just been getting slapped. And while you're called dumb, and while you're called stupid, and dumb money, and you just don't get how to trade, you don't understand how the market works, you don't get fucking anything, right? The reality of the situation is this. It's not your fault. It's not your fault. You're not the one targeting these names for absolute. I mean, obviously there are names in here who maybe don't deserve to be a $10 billion market cap, whatever, right? But there's a reason they ran in the first place. There's a reason this went from $2 to $30. There's a reason that Wish has done this. That it's gone from 17 to 32 and all the way down to $2. You want to tell me that Wish is a $1 billion company? Come on. No. I don't buy it. And I think that these guys will have their day of reckoning. And that day of reckoning will derive from you. It would obviously be ideal if these guys would have covered sooner, if they don't play the market at the expense of others. But open your eyes. Look at the level of corruption. Look at this chart. Look at the way the system's built to take advantage of you. This is what we're out to fight for. This is what apes are fighting for, is to end shit like this. Shit like this ugly graph. Like these ugly charts. Across a variety of different names, for whatever reason or another, that have been targeted maliciously by short sellers because they just do not want you to win. That's what I've got for this video, my friends. I'll catch y'all on an evening video tonight. Much love. Light taps as always. And peace.
Okay, so that was actually a really good video by Trey, as usual. He has pretty good videos, but that was an exceptionally good one. So thanks for sharing that. I agree with him. A lot of... is that the guy invented Ethereum? No way. Okay, so essentially...
Girls, welcome back to freaking Trey's.
So essentially what he's saying is, yeah, a lot of these stocks, the small to mid cap stocks are being targeted. I don't disagree with that. I agree that that is what has been happening. And I keep repeating that over and over in my videos when it comes to AMC, GameStop, and metamaterials, and even including Clover and IronNet as well. But the big factor, one of the things we have in our favor, is metamaterials stands out amongst all those stocks, because those other guys, GameStop, AMC, and so on, they don't have a special dividend that is looming regarding oil and gas assets that are worth billions of dollars. They don't have a reverse stock split that we had recently last year. among other things. There's so many things going for metamaterials. Not all those companies are in a field where they're pretty much the big player in the metamaterial industry. They've got a connection. They've got connections with the federal government in so many levels. When we look at the Department of Defense, the Department of Energy, previous contracts and active contracts with the largest companies in the world, including Boeing, including Airbus, including Sekisui, including Covestro. There's just so much going for this company, and you can't say that about AMC and GameStop and Wish and all that. Metamaterial stands out head and shoulders above all those companies in terms of the future prospects, in terms of what they offer humanity as a service, as a company that seeks to benefit humanity as a whole in so many ways. So I think metamaterials does have a big advantage over those, although I do agree with the sentiment that all these stocks, small to mid cap stocks, are being shorted, and metamaterials falls in that realm. They have a lot more X factors, you could say, that will come into play and take them out of that hole a lot quicker than these other companies. Although he's saying what it's going to take for a lot of these companies, such as AMC, GameStop, to come out of the hole is for these shorts to just cover their positions, and there's going to be a day of reckoning. Metamaterials doesn't exactly need that day of reckoning alone. It doesn't have to rely on that. They have so many other things going for them, as I just mentioned, that will show us what this company is really worth and what they can do. So thank you very much for your time. And thanks to Trey's Trades for that video. It was really good. And until next time, God bless you all and God bless your investments.